Let me save you from making a mistake that could potentially follow you for years. If you're trying to buy a house right now and you're cutting corners, rushing the process, or even taking shortcuts just to get under contract, this video might be for you. I've watched people over the years lose tens of thousands of dollars, get stuck in homes that they can't sell, or flat out regret buying within the first year that they own the home. So today what I'm doing is I'm breaking down 10 dangerous house buying shortcuts you'll regret. In those, these are more financial decisions that I've seen take place. It's not your typical started looking at houses without a pre-approval, stuff like that. It's not that. These are things I've seen over the year that nobody really talks about as much, and I want you to know what could happen. And stick around, because one of these, especially number 10, is one I did myself and got wrong. What's costing me today. Let's get started. What's up, guys? My name's Chad Dorman. I'm the local realtor right here in Columbia, South Carolina with eXp Realty. I help first-time buyers, move-up buyers, and people relocating from all over the country figure out how to buy smart, not just the how to buy fast. And if you're new here, listen, this channel's all about what I go over. This is here right here in Columbia, the Columbia market, buying homes right away, avoiding expensive mistakes, and tips and tricks to help you when you're going in and looking to purchase a house or sell your house. Now, if you're moving right here to the Columbia market, or anywhere for that matter, go ahead and hit that subscribe button, click that notification bell so you can be the first to find out all these tips and tricks that I give all the time. And if you're watching from somewhere else besides right here in Columbia where I do, no worries, I can connect you with a great agent anywhere in the US. Go ahead, let's get into the shortcuts people take and why they usually regret them. Let me tell you a little bit more about what we're going over in this video. Taking shortcuts when buying a house is like building on sand. Looks fine when you go in, looks fine the first day, and you feel excited when you go in. But when the economy shifts, rates change, or life happens, that weak foundation can show up really fast. Now, what do I mean by that? Listen, the average first-time homeowner does not purchase their first house until they're 40 years old. Affordability is great here in Columbia, but we still struggle with it, even though it's better than just about anywhere else. All these people that are 40 or below, and some that are above 40, are still trying to purchase houses. And there's shortcuts that you can take a lot of times normally wouldn't be approved, or how you can get approved, that these are financial decisions that sometimes they end up great, other times they can cost you. And what this video is going to be about is the dangers of how that can cost you. So let's get right on into number one. Number one, zero down payment loans like VA, USDA, FHA. Now, let me be clear. I'm not anti-VA or anti-FHA or anything like that. They are very powerful tools. Matter of fact, somewhere between 25% and 50% of my loans that I do with most of my clients are FHA or VA. But here's the danger that nobody ever talks about. When you put zero money down, you start with zero equity. You think, oh, I can refinance later. Well, you've got to have equity in order to be able to refinance. I just had a client do this with zero down, and it's a great program. And I'm further down in our shortcuts, I'll tell you even more about it. But if that market even dips slightly, you're underwater. Now, when I say you're underwater, it means that you could owe more than the house is worth. Or if you need to sell early, you move jobs or you lose your job. You may find out that you have to bring money to the closing because you're talking about commissions and everything else that come off of it now. Also, there's higher total interest paid over time, less flexibility to refinance like I was talking about. And in some cases, you have PMI or permanent mortgage loan baked into the loan. Most VAs and FHAs have permanent mortgage insurance. Now, you still have it in a lot of conventional loans too, but once you have 20% equity in the house, you can get rid of that PMI. But on FHA, VA, and USDA, you cannot do that. Now, another little trick that a lot of people don't realize, if you put one extra payment toward principal, not interest, but toward payments you have when you're first making them. The bank's charging you more interest up front first. It's to the latter half of your payments is where your principal taken out instead of interest. But if you put one extra payment a year against the principal in your loan, you can have it paid off 7 to 8 years. If you put 2 extra payments per year against your principal, so instead of making 12 payments, you're making 14. It's almost like you're doing a 15-year loan. So think about those. You'll build equity in your house quicker. And also, like these clients that I just did, they were on phase 1 or 2 in new builds. As they build more through phases 2, 3, and they're doing it across the street, theirs is going to appreciate pretty quickly in there as well. There's little things built in. Like I said, these shortcuts are not bad, but I've just given you the dangers of how you can get into it. Now, in a stable market like Columbia, most of the time you're okay, but you just don't know. Let's go on to number 2. Now, number 2, having your parents co-sign. Again, like I said, that startup age, first-time home owners, the starting age to that is around 40. This one almost makes me cringe because a lot of people are trying to purchase a house sooner. And what they'll do is they want to try to get their parents to co-sign. I had another person got upset because their parent would not co-sign, because I went to the parent and explained to them, if you co-sign, they're coming after you if your son or daughter does not make these payments. The debt to income ratio is wrecked. They may not even be able to buy, refinance, or downsize later if it's taken their credit down and stuff because the son or daughter is not making the payments. And if you miss payments, they're legally responsible. The co-signer's legally responsible. They can be sued, and this can make holidays get awkward really fast. Now, here's the thing. Columbia is not a boom or bust market. With all the state government, healthcare, insurance anchoring this economy, waiting to get your own credit and income is usually the smarter play in this. And there's no family drama required. If you need your parents' help, you want to be able to do it on your own and have some in reserve. We're going to talk about that coming up soon. But remember, if you go asking your parents to co-sign, unless you are making bukus of money, which you would not need them to co-sign, make sure your parents know the risks in doing that. Some will. I've seen it end up great. I've also seen it end up badly. Number 3, relying on house hacking to survive. Don't know what house hacking is? If you look it up on YouTube, it actually sounds pretty cool on some of these people that are doing it, but it's risky. And if you need rental income to pay your mortgage, you're already in trouble. So what is house hacking? House hacking is if you buy like a duplex or you buy a bigger house and rent out a room, and you're using the rent to pay your mortgage or even half your mortgage. One of the reasons I do not do rentals myself is because rental, it's not their house. They don't take care of the house like you would. At least half of them do not. They could lose their jobs. They just move out and quit paying, stop paying. Rental income, don't go in and do something like this in order to pay your mortgage. You want to do something like this, the rental income should be bonus money, not survival money. If your budget collapses without a roommate, you just bought too much house. We're not even talking about keeping some in reserve for anything that happens. This is just relying on that rental income to pay your mortgage. It's not smart at all. Number 4, adjustable rate mortgages or ARMs. It's almost like a teaser rate. So you get a certain rate for 5 years or for 7 years or something. So it's low for then, but then it kicks up. And a lot of people think when they do this, I'll just refinance later once again. But you've got to have equity in that. Equity requires time plus appreciation. And if rates stay high and values stall, you're stuck with a payment that can jump hundreds or even thousands per month. To me, the ARMs are not a strategy, they're a gamble. You want to know what your interest rate is and know that it's not going to jump later. Make sure, once again, you have the money now to do what you need to do. Figure this into your budget. Number 5, maxing out on your pre-approval. Now, when a lot of people get pre-approved and they get pre-approved for say 400,000, 500,000. Listen, what pre-approvals can oftentimes ignore is rising property taxes, insurance increases, HOAs go up, because your mortgage has an escrow account that pays those insurance and property taxes. Many times you get that letter at the end of the year that says there was not enough escrow to cover your rising taxes and property taxes. So we need to bump your payments up some. That's what a lot of things do not account for. And again, you want to buy a house based on your budget, not based on your approval. You're approved for 500,000, you may not be able to afford but 350,000. And you never know what can go wrong with a house that you need that extra money for something else. Now, if you're maxed out and your house poor, anything that, whether it's hospital bills, whether it's you lose your job, whether it's anything like that, you don't have that nest egg to really help you out. Make sure you are doing it based on your budget, not your approval. A lot of that younger generation, I have many of them come to me and that's, oh, I'm approved for 300. Well, we can do 300. Just know what you're getting into and know those warning signs and make sure that you plan ahead, not just in the moment. Number 6, huge pet peeve of mine, using online lenders only. Online lenders, what they're great at is they're flashy, like Rocket Mortgage. They're great at marketing. What they're not so great at is local nuance, creative structuring, or even saving deals when something goes sideways. All my lenders that I use are local, but at the same time, they're also, you have their cell number. These big banks, you're working 9 to 5. And even if you have a great loan officer, they have no control with those bigger banks over their underwriting. The local ones, a lot of times they'll have underwriting built in. They know their underwriters. They can help you quicker and they can help you 24/7 just like me. I'm available all the time. I make sure the people that I work with are available most of the time. And these local lenders, they can help you avoid that PMI. They know how to structure assets. They know how to close deals on time in this market, and they know the Columbia market. It's not just something you're doing online. To give you an example, in the heart of COVID, this one blew my mind. This was a USDA loan, and they were giving her 4.3% interest rate. And she was ready to go. This was on a $500,000 house at the time. I hooked her up with one of my local realtors, Daniel Atkins with Ameris Bank. He got her this was on a Friday night. I was making calls at 8 o'clock that night. Got her she had great credit, everything. And within an hour, he had her approved for 2.5% financing. Literally cut it in half almost. Talk to me about the lenders that I have. What I love about my lenders too is they explain things better. They give you options, not just one option and let's go with that. Always go with a local lender. I can help you out in that. Give me a call. I'll set you up, send you a text. I love talking to you. Again, call me anytime. Shortcut number 7. Misunderstanding down payment assistance. This is with lending also. This is with Heroes program with state of South Carolina. It's a great program and everything. This is state assisted stuff. This one can burn a lot of people. A lot of assistance programs, they're almost like silent second loans because you're getting that money. And what does it mean though? If you sell too soon, you have to pay it back. A lot of people don't realize this. Many of the assistance programs with South Carolina, they'll give you up to $10,000 toward closing costs and stuff. So you don't have to bring as much to the table, but you have to be in that house 10 years. If you sell before that 10 years, you have to pay it all back. Many think it's free, and there are some that are free. A new build that hit recently, it's 3 years instead of 10. Which was incredible. I didn't even know this particular new build. I can tell you who it is. It was with DHI Mortgage with D.R. Horton. When you're doing that down payment assistant, make sure you're reading all the fine print. Or better yet, have someone like me. I don't know a lot, but I can read contracts. Or have someone like one of my local lenders explain it to you before you sign. Number 8, this is skipping a buyer's agent. Listen, I had a friend of mine call me about their parents recently. He was trying to recommend them to me. And when he did that, they said, oh, we're just going to use the listing agent there. Let me explain something to you. That listing agent is representing the seller. He is looking out for the seller above anything that you do. You need a buyer's agent. I have not had one buyer this year have to pay their own commission costs. Sellers are still doing it because they know they're shortening their pool of people looking at their house if they're not offering commission. And it's a conversation I have with all sellers and with buyers. Now, this really goes a lot of times. People think, oh, especially with new builds, I don't need a buyer's agent. Matter of fact, the builders are not going to give me as much if I don't have a buyer's agent, because then they don't have to pay their commission. Listen, new builds now, especially here around Columbia, they recommend you have a buyer's agent, and they are making it easier for you to do it because they can get bit on the back end as well. It's a conflict of interest. If you're looking out, the seller has their confidentiality. You can't even negotiate. How can you look out in a negotiation for your seller and for your buyer? I've done some dual agents, been a dual agent on the seller and buyer side before, but it has to do with family or people that know each other and have already got everything planned out above anything else. It's the only time I would do it. I truly hope South Carolina, like Florida, will go ahead and outlaw dual agency at some point. You negotiate repairs, you're looking for credits toward closing costs, etc. You want somebody, a buyer's agent, that's going to protect your interest. And as Columbia right now, we're still a seller's market, but even as we have more inventory and it's shifting toward a balanced, somewhat buyer-friendly market, representation matters more than ever. You don't save money skipping an agent. I promise you, you don't. You just lose leverage. Number 9 shortcut, draining your bank account. Oh my goodness. If you have to put down 3.5%, 3%, or if you're putting down even 5% on a conventional loan or something, do not drain your bank account. And you buy a home and you have zero savings left. You didn't buy a house, you bought stress is what happened. Stuff will break. This is the joys of home ownership. Look, when you go to buy a house, after down payment, everything, make sure your seller's agent or your buyer's agent does a breakdown of what you're getting and what payments that you could use. Your lender can help you even more with that because they know what fees for your lender are doing. Then you can call the lawyer and ask what closing fees they charge. You want, when it's all said and done and you purchase the house, you really want 3 to 6 months of expenses set aside. This is a buffer for repairs, gives you some breathing room, and owning a home without reserves, it's almost like driving without insurance or going through this thing called life without health insurance. It can really blow up quickly and you owe a ton of money if something happened. Have a little bit in reserve too when you go to purchase that house. Keep saving. If it means you have to wait 6 months to a year, do a rental agreement on an apartment or something instead while you look, do it. I have clients I've been working with for a year, 2 years, 3 years as they get ready for it, and then they pull the trigger. I can help you do it fast if you're ready, or I can help you do it slow. Just let me know. All right, shortcut number 10, borrowing from your 401k. And this is the most dangerous. When I was in between jobs years ago, I actually blew my entire 401k. I'm not gonna lie, it's about 60 grand. And I had to pay taxes on it. I had to do a lot of things, just young and stupid. Your 401k is for your retirement and for your future. If you wanna borrow from your 401k, this can go nuclear real quick. Yes, you can borrow up to $50,000 against your 401k a lot of times. But what happens if you lose your job? The loan becomes taxable income, plus there's a 10% penalty. And while that money is out there, what is it not doing? While you're using it and borrowing it against your 401k, it's not growing. You're losing compound interest that it can be doing, and you're robbing future you to buy now you a house, which never ends up good. I've seen this one wreck long-term financial plans more than any other one shortcut. Please, your 401k is for your retirement. I've seen it go right too. like I said, these are all warnings against financial decisions that you possibly make and a shortcut in order to take to purchase a house. Make sure you have all your ducks in a row. I'd be glad to sit down with this. I do not have to know figures, but I can go over any of this with you. Better yet, a lender can go over it even more, and they'll give you the same warnings. Will they do it? Yeah, they make money just like me off of you. I'm not gonna lie, but the warnings should go with it, and make sure you can't ever say that you wouldn't be told. My goal, my job, I'm more of a mediator, negotiator. People think my job's to make money off helping you purchase a house. No, my job is to make sure that you are in the best position to do it and that I'm taking care of you, not just for purchasing a house, but making sure you know all the warnings that a lot of people won't give you because they want that commission so bad when you're purchasing a house. I would much rather you wait that 6 months to a year and do it right then and just rent until then. It's not a bad gig. Now give me a thumbs up if you liked any of this information today. But here's the truth. Buying a home is not a race. It's a foundation decision. It's the most money you're gonna spend on something, most likely in your life. Shortcuts feel good in the temporary, but they can show up later with interest. If you're buying right here in Columbia, South Carolina, I'll walk you through every bit of this. I am about your well-being, not necessarily just selling you a house right away within a week so I can get paid too. I want you to budget first, strategy second, and house is the last thing to come. And if you're watching from somewhere else, listen, I've got trusted agents nationwide that I can connect you with. And even if I don't know or have any agents there, I do an interview process with agents in EXP where I can find you somebody that will help you and that does it right when they do it. Listen, drop me a comment, share this video for somebody else that might not know it too. Like the video, subscribe if this helped, and before you take a shortcut, let's sit down and talk. I love to sit down face to face with you right in a Zoom call where we can talk about it even more, because regret is way more expensive than patience, but patience is a lot tougher route to take a lot of times. I'll see you in the next one.